coming to the third slide, if you look on the bidding prices, all the big stainless steel companies have increased the bidding prices of the January's cargo, and especially for Chingson, Tisco, Bao Steel, and Jisco, they all have increased the price by 200 RMB. But if you look the current prices, the price has already gone up above the bidding prices, whatever was declared in January. Today, if you see the chrome ore prices and the ferrochrome prices has already moved up, and today offer for ferrochrome in the market is around 89 to 90 cents, which is much higher than the bidding prices of January. So it is expected that the February bidding prices must be higher than the January prices.
Our clients today are looking at best practices. So we look at all these best practices and kind of combine them together. And this is what I'm showing you here. And there are three links in the chain when it comes to supply chain synchronization. One, of course, is history. We cannot ignore the history if we look in the future, right? That's an old saying. But the history doesn't tell us everything. And if we sold 10,000, if we bought 10,000 tons of moly 2 years ago and 5,000 tons last year, going in the middle doesn't really make sense. That's an arbitrary assumption. So we have to look at sales history, but we also have to marry that with data analysis. And how do we do that? The best practices today are looking at simulation models on historical statistical data, combining that with time periods, with seasonal changes, with shipping changes, and with market changes. And so when you have your sales history and you have some data analysis in there, then the best practice today is to go to the client, to go to our customers and say, look, we expect you're going to buy this, or you're going to use this much moly or this much scrap or whatever. What do you think what do you think about that? So marrying these three things together, the data, the history, and the customer feedback, this voice of the customer, this blueprinting, talking to the customer, then gives you a very holistic understanding of what the purchasing demands are going to have to be for your own raw materials to meet your customers' demands. And through modeling, you can blow back the entire raw material bill of materials for your own production line so that you know exactly what you need to buy. And this is something, this holistic approach is being used more and more in steel production to kind of offset and hedge against the volatility of the raw materials markets.
As we look ahead for 2021, the silicon prices I expect will continue to go up based on all the parameters that we see in place now. Currently, they're about $2,400 a ton, and I expect to see prices over $2,600 a ton by year end. That will depend to some extent on new plant or restarts of existing plants. There's really no new plants that are being built in silicon currently. So everything's kind of built in for the next 3 years in terms of this available supply. Again, the wild card is China, what they're going to do with their exports, which would affect more of the Europe pricing. And ferrosilicon, I think the price has limited amount of upside at this point. It's near historical highs. And so my price range estimate for next year is 80 cents to $1.20 in the US and 1,800, roughly 1,800 in Europe, up to maybe 2,400. But the current price is probably going to be either the high or the midpoint for next year, this year, depending on how things shake out with these different parameters.
Chrome ore and ferrochrome prices were in a downtrend for a long time because of the oversupply market conditions. However, the fundamentals of the market seem to be changing, and tailwinds are much more stronger than the previous years. Although it is likely to see a bullish phase in the next term, it is important to emphasize that the market supply is still an important matter. Ferrochrome supply of South Africa in the last years become concentrated amongst a couple of producers. However, this had a limited impact on oversupply. Other than that, numerous producers created a fragmented market elsewhere and a high level of production. However, with this down cycle, high-cost producers had to cut their production.
As I told you, there is a big price sky high in China. Basically, there is a shortage of production of ferrochrome by the producer, especially in Inner Mongolia and Sichuan province, because of power cut. And these power cuts are applicable for the furnaces having 25 kV above or below also. So that has given a shortfall of the production of ferrochrome in January around 10,000 to 15,000 tons. And they expect this power cut may continue till next month also. So this is the reason there is a big inquiries are coming, especially from the stainless steel plant and traders. They're all trying to keep the stock at their place. So they are trying to book the orders in double capacity. Suppose if the requirement is for 1,000 tons for this month, they are trying to add up for the next month also. So that is additional bookings they are taking place. That has given a price sky high in especially in ferrochrome segments. Whereas if you compare the chrome ore market is also moving up. The price has gone up by $10 to $15 compared to last week. That is also because the chrome ore suppliers are thinking that maybe the Chinese government will allow the power to resume in operations. Then the ferrochrome production will start up rapidly, and at the time there will be big requirement for the chrome ores.
Turkey has been an important player, especially in the chrome ore markets. However, over the years, the share of Turkey in China's imports has been diminishing. There are many factors, but mainly South Africa's low-cost UGT production and the developed technology in China to utilize these low-cost chrome ore is a match, and that's why Turkish producers and the production has become much more redundant. However, Turkey is one of the biggest exporters, one of the biggest importers of China, but the share is still falling. If you look at the domestic market is quite fragmented. There are a couple of big producers. One is, by the way, Yıldırım Group, but there are many small producers in the market. And these producers are quite price sensitive. If these producers, especially the minor ones, see a price rally, a price increase, they immediately start to produce and start to export to, especially to China.